Okay, we are going to take a look at this trade that I did on Friday. Okay, it's posted on my Twitter account at Forex Recipes. So go there for all my trade journals. That's where I journal all of my trades. Okay, let's go to the charts. Now, I had already mentioned that I was looking for shorts up around 2354. Okay, go back and look at some of the previous videos on gold, particularly the higher time frame analysis videos. That's where I do my higher time frame analysis and work out how I want to trade, what moves I'm looking for, what my directional price is. Okay, does that mean I automatically short when we get to 2354? No, it doesn't. Okay, that means that that's what I'm looking for, and I then need to see a setup. Okay, so here on the chart is Thursday's high. Okay, Thursday's high is the high of the week, and what I'm looking for on a Friday is, do I get some kind of a reversal setup? Okay, now the way that I like to trade gold is I'm looking for change in direction midweek. Okay, Wednesdays. If I don't see it on a Wednesday, then I'm looking for that same on a Friday. Okay. So if you look at the market on your own chart, you can see that we pretty much continued to go up. Monday, Tuesday, we kind of went down. It was a false move at the start of the week. Tuesday, I was thinking, okay, we probably go down to the low of the week, which would be Tuesday's lows. Didn't happen. We basically got a consolidation on Wednesday. Therefore, I'm looking for the next, towards the end of the week then for that reversal. Okay, so let's talk about the setup and what I had seen. I want to walk you through the entry and then how I typically set targets. Okay, so whenever you see these pumps, right, I'm on a 15-minute chart. And whenever you see the market give you this kind of a big pump up, right, where it's just going in one direction, then that's when you want to kind of see, okay, what's going on? So that was obviously, in hindsight, the false move, because that wasn't completely taken towards Friday's session, right? We completely went down the other way. So what is that? Okay, well, what that is that is Thursday's high. Now I'm then waiting for Friday to see, do we get a reversal setup? Okay, what is that reversal setup? Well, number one, you first want to see the market trade above that high. Okay, because on Friday, Thursday is a high of the week. If I'm looking for a reversal on a Wednesday, then Tuesday is a high of the week. Okay, and so I'm looking for a reversal setup on a Wednesday, which is midweek. If I don't get it on a Wednesday, then I'm looking for it on a Friday. If I don't get it that Friday, then it means we're still going higher other than looking on the following Wednesday. Okay, so what do we see here? Once the high of the week has taken, right, that's the first thing. Notice that we get some shallow highs. This is all just creating liquidity. Okay, this here is Asia, right? This little move up. All of that's Asia. Okay, Asia comes up. It doesn't take out that high. Okay, retail traders think that's resistance. They short. Okay, and they get, if they are good, if they are sensible, they'll take off profits there. And that's like most of retail traders, they don't do that. Okay, this is then the open of London, and London goes up and stops out anyone that was short from Asia. Okay, that little move there entices longs to get in the market because this is the stop hunt into Asia, right? So longs now get into the market. Again, look at the shallow run we get here. This is quite a shallow run to Thursday's highs. Retail traders consider that as resistance. So now we have a triple top, right? Now they short and they were on the correct side, okay? That then comes down to stop out anyone that was long for London, okay? That does a couple of things. That entices short sellers to get into the market, okay, at a break of London, and also entices long traders to get in who want to take the opposing end to take out these highs of Asia and London. Okay, the market needs liquidity on both ends. Okay, shorts are getting trapped, longs are getting trapped, all sorts of manipulation is going on. Retail traders are confused, right? They went short here, they went long here. They got the longs were in the money here, the shorts got stopped out, then the longs got stopped out. Okay, so it's a whole manipulation going on here. But what smart money is waiting for is the break above the weekly high. When do we get that? Well, we get that with this move up in London. Okay, London comes up and takes out the high of the week, and this here is the important bar, right? That green bar. Okay, that becomes the bearish order block. Why is that the bearish order block? Because, well, I should say it's the high probability bearish order block, because that's the bar that took out the high of the week. Okay, and then what I like to do is, as soon as price trades below the open, as we have on this bar, then I want to take my short entry. I might wait a little bit just to see how price is going, but basically that's my trigger. We've taken the high of the week. Okay, there is the bar that's taken that. That's in London, so it has to be within a session, and it's taking that liquidity. Okay, we get now price moving down, and I'm in the market short as soon as we go below that opening of that bar that took out those highs. My stop is a bit above the high there. Okay, that's pretty tight, that stop. So on gold, I typically put in a 25 pip stop, maybe a little bit higher, but I'm watching how the market behaves. Okay, and my stops are on closing bars. I don't put a hard stop in. It's not based just on price. I want to see bar close above my stop. Okay, I'm not saying that my stop is right there. Okay, it's somewhere above there, right? Now I want you to notice that the body candles here come in to 50% of this bearish order block, right? This high probability bearish order block. That's a bearish order block because that's the bar that took at the high of the week, okay? And then immediately it came back down and we go through that opening price. That's where I'm short. As I said, I may wait a little bit longer. If we look at where I actually got in, it was 2363 from memory. 2363.82, so around 2364, okay? And if you look at where 2364 is, 2364 is around there, right? So there's a bit of slippage, obviously, but it's right up there in this candle here, where we have the open of that bearish order block. So right at the highs there is where I shorted, and it's based on that, okay? Now this here I like. I actually want to see this little move down is between, this is the high of London, and this is the open of New York, okay? This is around 8 a.m. New York. Now I really like the fact that New York is opening high. Whenever you see New York opening high, okay, then high probability we're going down. And when you see you've got liquidity beneath, right, all these lows where people are long, that is going to be the fuel for this move going lower, okay? So we got this liquidity here, you know, all these lows are going to help this going down. That's why I like trading short when we're at the high of the week and New York is opening high. Sometimes it'll be London, okay? If you remember a short that I did from a few weeks ago, London started the move and New York continued the move, so that's important as well. You just got to look at what's going on, you know, who's taking out that high of the week. Are we trapping longs, right? Are longs getting trapped above these breakouts, right? Because most breakouts fail. Now, you might not see that candle going up as the bearish order block, okay? For me, it's easy because I'm looking for a short above 2354, okay? Review my analysis video and you'll know what I'm looking for and where 2354 came from. I'm already looking for a high of the week to be taken on a Friday, meaning Thursday's high to be taken, okay, for that short. So when I see that and I see price now trading below that candle was created inside of London, okay? So that's important. It's got to be within a session. I'm short there. You may not see that, so you can wait for a break of structure, okay? This little swing low created this high. Okay, this high was trying to stop out anyone that was already short, okay, but the bodies are within the midpoint of that bearish order block, meaning that bearish order block is therefore still valid. We haven't violated the price point of that bearish order block. But if you're still not comfortable, you can wait for this swing low to be taken because this swing low created the high, okay, and that occurs on this down candle, okay, and the time of that is 8:45. That's the 8:45 9 a.m. candle, okay, and most reversals occur at the new hour. So this candle here is the last 15 minutes within the 8 a.m. to 9 a.m. first hour, okay? So you can expect a reversal in that candle, right? 8:45, the opening of that candle, closing time is 9 a.m. That is the start of a new hour. That candle there broke structure, okay? Because that's the swing that made the high. So that's the most recent intermediate swing that's broken. And then this candle is where you can also short. That is another bearish order block, okay? And you can notice that this, when you have a swing, okay, a swing is a low, then a higher low on the left and a higher low on the right. The last down candle should hold price when you break that swing. So when this candle goes up, notice that, let's just bring this chart, make it bigger a little bit. This up candle does not go beyond this down closing candle. And that is how you can determine if that is going to be a valid place to short, okay? So that's expected. If this is truly a swing that created the high, which it did in this case, and we are bearish, when you see a break of that structure, this up candle should not penetrate the last down candle of this swing, okay? So you can short at that level, expecting price to move lower, stops above the highs, quite tight stops, okay? You don't have to, if you're uncomfortable shorting as it's moving up, you can wait for it to go down. You can even wait for the market to go below the opening of that if you are not comfortable shorting as this is going up, okay? It just means that your stop's going to be wider because stops need to be above the highs there, okay? So that's another level that may be easier to identify where we can expect price action to now be reversed. You can also wait for this clear structure, okay? This swing created this high, and that's the swing that contained the bearish order block, okay? So you can also wait for that swing to get violated with this down candle, okay? That's the first 15 minutes of the new hour, okay? And your entry, again, this is the same concept as this. This is a swing, okay? And this down candle should hold price. So when we go through there, this little up move on the next 15-minute candle is coming into that down candle, okay? So you can short as it's going up into this zone. So lots of opportunities to get in on this move, okay? The best is obviously when you violate this bearish order block that took at the high of the week in London. Once price starts to trade below that level of the open of that candle, you can get short. Your stops will have to be above this level. And my stops are based on a closing candle, okay? I don't use, inside of this wick, if my stop was there, this would not violate my stop. I'm looking for closing candles above my stop, okay? My stop wasn't just above this, a bit above there anyway. Now, let's talk a little bit about targets, okay? On a 15-minute chart, you can target the first gap you see on the left-hand side on this pump, okay? The best target's going to be just where the pump started. That's a pretty easy target, okay? And it doesn't matter if it goes beyond that. You don't have to get the absolute best exit, okay? So let's look at that. If you were to get in, let's say you got in at this open below the open of the bearish order block. Okay, it's on the down candle. Just down to that fair value gap is 190 pips. Down to the pump, start of the pump is 280 pips. Okay, if you weren't comfortable getting there and you got in here when we broke that swing, which is breaking structure, and you got in somewhere, let's say you got in not even in the up candle, you got in when it came back below the open of that up candle that's coming into this down candle after this swing has been broken. Let's measure that. So let's say you're getting on the way down from here to that gap, 150 pips, okay, to the pump, start of the pump up is 240 pips. So lots of movement from the high of the week. That's why you're getting such movement from the high of the week after a breaking structure. Let's say you got in after this breaking structure as it's moved back up into this down candle, okay, so you got in somewhere in the down candle, back down to that gap, that's still 100 pips plus to the start of the pump, that's over 200 pips. So quite easy targets. High of the week is the key, right? High of the week taken on the right day, right? Wednesdays and Fridays are the key times to look for reversals, okay? I'm not saying that they don't happen on other days. They can happen on Monday, Tuesday, and Thursday, but I'm saying that my study, my experience shows Wednesdays and Fridays are the best times to look for reversals at the high of the week or the low of the week if you are looking for price movement to the upside. Now let's talk about why I was targeting 2322. Okay, so my target was quite lower. So there's a couple of things that I look at. I was looking at a 480 chart. Okay, so on a 480 chart, I was looking at 2322 because number one, that's where the 4 hourly order block was. Okay, number two, I'm looking for the low of the previous day. Okay, so this here is the low of London on Thursday. This here is the low of, let's see, let me see what. So I'm on a 4 hour chart. Let's go back to the 15 minute to find those low of the days. So number one, let me very quickly just go back to 480 and show you a couple of things. So typically I'm looking for the low of the day, okay, if I'm trading from the high of the week. Now 2322 was also the bullish order block on a 4 hourly chart, okay, so that was a key reason for why I'm looking for 2322. 2322 also, you can see this gap, okay, all gaps are going to act as support and resistance, and that's basically where we've also come into this gap. Even though the gap's been balanced, this inefficiency has been balanced in the past, the market will typically come to those gaps in the future as well. But 2322 was the order block on a 4 hourly chart. That was the key reason. Okay. Also on a daily chart, 2322 was also this order block here. Okay, basically this order block here. Okay, coming to this one. So that was also a key. And then also, if you look on a 15-minute chart, 2322 is also the low of the previous day. Okay, so here we have this is the low. This is the low of New York on Thursday, low of London on Thursday, and then this is low of Asia. This is Thursday, even though it says one day because Asia trades overnight. Okay, so that's the low of Asia, and so 2322 is below that previous day, and that's why I've chosen 2322 as my target. Okay, but you don't have to get the ultimate target, right? These gaps here on a 15-minute, the 180 gap was also similar. Okay, so you've got 180 gaps there that you can target. Okay, you can see that we've had a bit of a reaction once we come into these order blocks. Okay, so you want to take easy exits, right? From those levels that I've mentioned, from that swing, the upper swing broken, if you were to take a short from there down to these down candles in that gap, that's over 160 pips. That's all you need. Okay, so targets are not difficult. It's the entry and the bias that you need to get right. Okay, even entry, there's multiple entries. It's the bias that you need to get right. That is Thursday's high. That's been taken even on a 1 hour chart. You can see after we've taken out Thursday's high, we have these engulfments. Even that candle there broke structure. Next candle goes right back into there, right? Even that's a short right there. Okay, so lots of opportunities to get in, but the key is bias. So let's very quickly talk about what's next for gold. Okay, with this down candle, so a couple of things. Let's quickly look at higher time frame order flow, which I have touched on. Okay, but let's very quickly just look at what's gold been doing. So here we have, this is where this big move started, right? So once we got the high here, the high of this candle was 2450. Okay, notice that we have an up candle and a down candle. Okay, so that was kind of a false breakout, right? False breakout. Then we go down, right, from there. Now what's happened here, the market makers have pushed price up to bring it down. This little down candle is where they've done that work. Okay, so the market needs to come back up to the down candle so that the market makers can mitigate what they did to manipulate the market, right? This candle here is where they bought to sell, right? They've moved the market. So the market has to come back up to that level to allow them to mitigate and get out of their positions. So that's why the market's come up to that level, and that's why we haven't gone back beyond that level. Obviously, that is also to balance the market as well and to take out current short sellers in the market. Okay, so once we come back up to mitigate, which is that candle there, if you look at the price, right, look at how clean that level is. Okay, they come up there to mitigate what they had to do to bring the market up for the false move and bring the market down. Okay, so once they've done that, we go down, which is where they needed to go, and that has stopped out all of these longs. Okay, and the folks who were long from this initial move up as well, right? Anyone long from there has been stopped with that move down. Now what's happened? Same thing, right? Market makers have done a manipulation. They've pushed the market up, okay, before bringing it down. So now a couple of things have to happen. Number one, the market needs to come back up into this area to balance the market, okay, and to mitigate. The market makers need a way to come back off to offset their positions, and that's why we come back into that zone there, okay. And that was my 2354 level, and I showed how I got that in a previous video. So go back and look at that previous higher time frame analysis video on gold, okay. So I was looking for shorts at around that 2354, okay. Do I short from there as soon as we get there? No, I look for the reversal, okay, and that's what we have done. Now this move down on Friday really should have continued going lower. We've got lows here that should have been taken. These lows were from a previous Friday, that is Friday the 7th of June and Monday the 10th of June. They are equal lows. My expectation on this move down was that it should have taken the move all the way down and stopped out anyone that was already long, even down past through this, okay. That's where we really should have come down to. The fact that we've stopped here, okay, we've stopped basically at this order block, right? That could mean that we need to go back up and perhaps maybe re-look at this area here that's still open, okay. That could be what's in play. These people who are short from early in the week are still in the money. So I'm not saying that is what's going to happen, but it's certainly possible to come back up into that zone. But I do believe we will get some level of pullback, at least I think to 50% of this up candle to stop out, or at least balance the market with a big damage on Friday. So the first thing I want to do is what I might do is I might take away all of these lines here. We don't need them now. Get rid of all these lines. So the first thing I want to do is I want to measure where is the midpoint of this up candle. Okay, let's just turn on the midpoint. Don't need any of that. So we want lines to go to the right. There we go. So that's the midpoint of that up candle. Okay. So if we are going to come back up, we may be coming back up to that level. So where is that? Let's have a look on the charts now. That is at 2, 3, 4, 6. Okay. So that is just inside a gap. Okay. So that's not bad. So as a pullback, that could be where we are headed. Okay. And we might not. We may continue to go down Monday, okay, but I do expect a pullback after such a large move down. That's inside of a gap, so that's good, okay. In terms of pips, that's kind of up around that 230 pips pullback. Where else could the market go? Let's have a look at a 4 hour. This down candle is also a level, just like I showed on the daily charts, right? When we had that false move, where price, where are we? Where this down candle here, okay, this down candle from this big up down move, price has come back up into that down candle to mitigate. We might have something similar on the 4 hourly chart. If you see, we've got the same pattern, down move, up, down, okay? Price probably has to come back up to that level to mitigate. So I'm going to put a line there, okay? At the open of that, that could be where we come at to, okay? So it means that if I'm going to take a long, I'm not saying I will, I am expecting a pullback. Whether a long or not, I'm not sure. If price is going to go up, then I will want to see what does price do at that level. That's at least 120 pips. So we may not get back up to where I had initially drawn that line, which is 50% of this up candle, okay. We may only go down to that level. That might be 25%. Let's turn on the 25%. So that comes pretty close to 25% of that up candle, okay. But on a 4-hourly chart, and see that 25% of that daily up candle also comes in at close to the midpoint of this down candle. So I like this zone for where I think we may have a pullback up into, if we have one at all, okay. Or this level here, maybe another level, because that is more balancing this down move, and there is an inefficiency there as well. So what that means is if I'm going to take a long position early next week, then I'll see what does price do at these levels. Does it go through? Maybe then that's the target. But I do think a pullback's kind of due with this big down move, okay, to rebalance the market, okay, before we continue going lower. I need to assess that, okay, early next week, because the fact that we didn't continue going lower is a concern. Like this down move went all the way down, took out all this liquidity. Here we've done nothing, we've just taken out last couple of days. Okay, that could indicate that we are still heading higher, possibly to take out these highs and to rebalance this inefficiency. Time will tell. The way that I trade is I kind of look just what's the next move. Okay, I don't look too far ahead. I may have things in the back of my mind, like this I have in the back of my mind, this inefficiency I have in the back of my mind, these lower levels I have in the back of my mind, but I'm only looking for the next move. Okay, the next move in my view, because such a down day on Friday, is some level of pullback. That's it. That's all I'm thinking about right now. Where could that be? That's what my lines are. Then I'll trade or not trade, but then if I do have a long on, at least I've got some levels to watch out for. Okay, so I think next is a pullback. Where that pullback comes in, I've got some lines there, some zones to watch for, and then it all depends on what day of the week have we come into there. For example, if Monday, Tuesday goes up and Wednesday also goes up, and Wednesday's showing me weakness at that level, for example, if Wednesday showing me a reversal of Tuesday high at that level, then that might be a play to the downside, where we may take some of these lows that we haven't taken. Notice how these are positioned, right? These are positioned to have some level of a fake trend, right? This is a fake trend that I'm expecting the market to take, right? The question is when. Do we get that next week, or do next week we go up and take out these shorts and rebalance this? If I was a market maker, that's exactly what I would do. I would upset everybody, right, and take it up this level, take out these shorts and rebalance this, and then come down hard. That's what I would do if I was the market maker, okay? But this here is indicating to me that it won't be long before we take these people who have stops residing under these longs, or a lot of liquidity resides here, okay? And we should have taken that out on Friday. The fact that we haven't is suspicious to me, okay? We still could Monday, Tuesday, but I think there'll be a pullback now. Where that pullback comes into the question. Monitor the markets for your learning experience and see what happens. Do we go back up and attack anyone that was already short and go higher into this efficiency, right? When does that happen? What happens on Tuesday and Wednesday, right? Does Wednesday take out Tuesday's high? Does Wednesday become a mid-week reversal, taking out Tuesday's high? Or do we continue going higher up into Friday like we did this current week? And does Friday become the reversal, taking out Thursday's high, just like we did last week, right? Or do we first go down? Does Monday, Tuesday continue going down, take out some more liquidity before going back up? Okay, does Monday, Tuesday go down? Does Wednesday then reverse and go back up, taking out these highs, and back into this inefficiency? That's what you should be learning. Okay, monitor price action, learn what's going on the particular days of the week that I've mentioned and inside the session. What's going on in Asia? Is Asia providing liquidity for London to take? Is London providing liquidity for New York to take? Okay, the best times for gold to trade is the 7 a.m. New York, 8 a.m. New York. They're good. Okay, 9:30 a.m. New York is the best time. Okay, I will now talk with you in a future video.